So, and I said volume. Again, let me come again for record purpose. Order block, once you come to your charts, identify once you come to once you come to your charts, once you are able to identify the trend, you see all those curriculum I drop. These are things we are going to be following step by step. It's just like a checklist. Once you come to your chart, identify the market structure. Is it upward or downward direction? Identify if the market is in range consolidation. Better focus on up or down. Don't trade the range market. So once you've done that, just mark up your chart. After you've marked up your chart, the next thing you should look out for is the order block. Where can you place your order, right? And the most valid one is not just the buy or sell candle, just like it's stated here. Like I said, it's where the retail trader, smart guy seeks to place order. Even you, as a retailer, you want to place order. But make sure it's not just the buy or sell candle. The sweet order block is the one that creates volume. That is when let's assume there's order block and there's a volume, that there's a gap, it's more valid. Then you can decide to place order in somewhere like this and you take profit in the next break of structure. So we'll come to that. So order block is more valid when liquidity has been grabbed, just like this. Let's assume liquidity has been grabbed here and we now have volume here. Let's assume we have volume here. Let me change the color to green. Let's assume we have volume here. Then this is a high probability setup. But if there's no volume, fine. As long as liquidity has been grabbed, right? Both FVG, both of them are liquidity. So as long as liquidity has been grabbed, it's valid. So, and I said inefficiency that is caused here is when there's indifference or differences between the buyer and seller. That is what caused this gap. And for price to move further, price must retrace to fill this gap, either with a wick, anyhow, price must fill this gap before continuing its journey. And I said something that price is just like a vehicle. Price is just price is just like a vehicle. Just see yourself. Or once you come to the chart, see the price action, the candlestick bullish or bearish as a vehicle. Both the driver that is driving the vehicle need food, which is the fuel. Food is the fuel to human being. And to the car will need fuel to continue its journey. And what is that fuel? Liquidity. So price will need to look for liquidity anywhere in the market. In fact, every high and low in the market is liquidity. Just like now, this liquidity. Let me use this liquidity, this liquidity, this liquidity, right? Yours is just to spot liquidity so that you don't become the liquidity. We get to that later. I just want to show you something briefly. So let's go to the charts. Let's go to the charts now.
Okay. So, coach,
Yes.
so does that mean that whenever we say our order block here, but there is no FVG, so it's best for us not to take the trade, right?
We come to that. There are criteria you looked at before you taking the trade.
Okay.
Yes, but just know that your fair value, your order block is more valid when it creates an imbalance. When there's, you understand. So what
Yeah.
are we going to do now? We are going to mark all the order block, both the one that is valid and the one that is not valid.
Okay.
Yeah. We are taking everything step by step. So during our supply and demand, that is when we talk about premium and discount. So we are taking everything by. So now is our order block. We have a break of structure here, right? So
Yeah.
here's our order block. So we are starting from here. So if I'm giving assignment, we start from here also. Let me use purple. I'm using purple to represent my order block. Here's my order block. Where do I have another block again? This cell candle is my order block. Where is my order block again? I have another order block here. There are a lot of order block in the market, right?
Mm.
So let's identify all the order block first. Then we'll now come to identify the imbalance. We have an order block here.
Mm.
We have another block here which was mitigated. Even the mitigated candle created another block. So here we have another block here. So let's focus on unmitigated. What I mean by mitigation is mitigated or not mitigated is the one that price has not touched is unmitigated. The one that price has touched is mitigated.
Mm.
Um, Trying to place a trade. All right. So where do we have order block again? We have another order block here. Yes, another order block here. Where do we have order block here? We have another one here. So this price seems to be in an upward trend. So now price is currently in a downward trend, right? So let me delete all these things. So keep the charts clean. So after the order block, we now identify all the inefficiency. Now we're in a downward trend now. Where is the order block? Here's the order block. We have other blocks here. Yeah.
Yeah.
Here's another block. Let me zoom for clarity. Do we have another one?
Yeah.
I'm just copying and paste. I don't have time. Now we had a break of structure here, so we have another block here. Then we have one here. Then we have another order block here. Now, there's something I want you to know again. Whenever you discover that price is moving, let me use this as an illustration, on any time frame and leave a very big wick, and leave a very big wick, the wick becomes another block. Because if you mark the whole body, it will be too big. So this wick becomes another block. You mark the wick as another block. If you go to a lower time frame, you will see the, a candlestick there. The sell candle, the buy candle that led to the break of structure, you will see there. Always mark the wick. Anytime you have a long wick, instead of marking the whole body, take note of this I just said.
Okay.
I will give you an example later. So here's another block. Where do we have order block again? We have another block here. I'm marking this week is an order block. So what I'm doing now is marking all the order block. And I believe by now you shouldn't be confused about order block again. Here's another order block here. Price is still in a downward direction, right?
Yeah.
So here's another block here. We have another order block. This order block has been mitigated already. Price already touched this order block. This week here is another block. And discover that price up to this order block here and sold. Here's another order block. And we have another one here. Sorry, I forgot to mark this. We have another one here. Price is still breaking structure to the downward direction.
Yeah.
So we're going to be building on this NZ USD. So this particular week is another block. Which was mitigated. There's a break of structure here. I already have a setup here. 50 minutes US. We have the break of structure. The last class, we did not mark break of structure to this point. So I'm doing that right away. All right. Let me zoom. So we started marking our order block from this point. This is where I started from. The current market price, because price has been in a downward direction. So just a recap, order block, these are where retail traders, smart guys seeks to place order. It can be seen as buy or sell candle that led to the break of structure. And now wait for that to tell you that it's more valid when liquidity has been taken. If you want to take a trade, there are a lot of order block in the market. Does not mean that you should be taking order in all the order block. Look for a valid one. How do you identify their valid order block? One, liquidity must have been grabbed, either liquidity sweeping it, or inducement liquidity be taken, and it must create a volume, which is the gap. And now said gap is when there's differences between the buyers and the seller. A gap will now be created. So now let's identify the gap. So we've identified all the order block. So once we're able to identify the inefficiency, which you can call it fair value gap, or let me just be using the word fair value gap so that you'll be used to it. Once we identify the fair value gap, we now identify order block that is valid to take trade from. So let's start again to mark the inefficiency. But before I proceed, do you have any question? Do you have any question?
No, sir, I don't.
Favor, do you have any question?
No.
You said?
Don't have any question.
Okay, so I can proceed, right?
Yes, sir.
All right. So the next thing we are going to do now is to identify the fair value gap in the market. So I need to zoom so that you can see it clearly. Now, for you to identify the gap now, sorry, here's my order block here, right? Here's a gap from candle 1 to 3. So the space between candle 1 to 3 is the gap. I'm going to change the color of this to light. Let me use this color. So here's a gap. All right. You can annotate it FVG. Do we have any other gap? Yes, we do. We have a gap here. Was very tiny. Between candle 1 to 3, we have a gap here.
Yeah.
Do we have any gap?
Yes, we do.
Look at this one. It discovered as price was coming down. We had another block here. Let me mark it out. There's an other block here I removed earlier. Here's a gap here. And price tapped to this other block and bought up. So do we have another other block? This particular week here, this week here is another block. So I'll mark that. I'm just trying to mark everything. That does not mean you should mark all your charts with other block. Once you see once you get used to it, you'll be able to identify all the valid ones. So, but what we are doing now is to identify all the fair value gap in our trade. So here's a fair value gap. Price already tapped into it, and you can see as price tapped into it, swept the liquidity and went up. Here's another block. We have another one. All these are other blocks. So now, do we have other block fair value gap? Yes, we have another fair value gap here. There was a gap here. Price already tap into the fair value gap. Here's another gap here. And here's another gap. Price already tapped to it. Anywhere there's gap, price must fill the gap before it continues its movement. We have a fair value gap here. Here another one. And we have one big gap here. A very big one. Which price already tap into. Then we have another one here. We have another one. Sorry, there was another block here I did not mark. Let me mark it, please. This week is another block. If you go to 5 minutes or 15 minutes, you will see the body of the candle here. There's another block here. When you have a long wick and a small body, mark the wick as the other block. Because if you go to a more lower time frame, you will see the wick there. And discover that price tap into it a bit and did something meaningful. Then we have another one here. We had this gap here. Do we have any other one? After this, I want you to like start practicing on your chart because we'll be going for a break very soon. I will now come back to the class for liquidity. I don't want us to waste time here. We have a fair value gap here. We had another one here. Price created enough volume and discovered that because of this volume, price now do what? As price is going up, price is covering the gap. Price is covering the gap. Anywhere there's fair value gap, price always cover the gap. That is, anywhere market is inefficient, price will make it efficient. Anywhere price is imbalance, price must balance the market before continuing the journey. That is, price must fill the gap. I hope we understand.
Yes, sir.
Yeah. So do we have any? Yes, we have one here. And there was another block I did not mark there. Maybe when we start to identify valid order block, what we are doing is identify all the fair value gap order blocks in the market. Then we have a fair value gap here. If I'm to mark this in full, I should have something like this. And choose it. There are a lot of volumes here, but since price is on a downward trend, we are focusing on the selling order block, not the buying order block, because price did the push up on a lower time frame, but still price has been breaking structure to the downward side. Always respect the higher time frame. This particular chart, all entries that would have been taken in the past, we are going to look into them later in the future. So we have a fair value gap here. Price created enough volume. We have another one. There's another block here I did not mark. Which price respected? Here's another block and a volume. I forgot to mark it. This particular week here. This particular week here is another block. And we have a volume. This is a sweet order block from you. This particular order block is a sweet order block. That's why it's called a price to this order, because it created enough volume and price sniped it and bought a bit. We have another one. Yes, we have. We have a gap here. So how do we identify a valid order block? A valid order block is the one, let me mark everything here. A valid order block is the one that creates a gap. All right. It could be either the buy or sell candle. If you don't see the buy or sell candle, as long as there's a gap after the candle, you can mark the candle as another block. All right. If the candlestick creates that buy or sell, you can still take it. All right. You can still take it. Now, to me, I've seen a setup here, which I can expect price to come here, take a continuation trade. Price may not come to this order block because this one has fair value gap, and what we have here is inducement liquidity. Sorry for taking you to the pusher, and we have liquidity sweep already. So I'm setting limit for this trade. So with this, I'll do my 1:3. So now let's identify, we have 3 minutes more. Let's identify the order block before we jump to the next topic, which is liquidity. So I'm dropping all the videos after this class. So let's use this 2 minutes that is remaining to ask a question before we identify valid order block. So what we have done now is we've treated order block and inefficiency. So this was where I started from. So let me zoom my chart. I know everything will be like a magic to favor now. So this was where we started from. So we are able to identify all the order block, and we are able to identify all the fair value gap. And like I said, a valid order block is the one that created a gap, a fair value gap. So you can confidently look at that particular area and see that liquidity has been grabbed, and then you can confidently look forward in taking orders. Favor, do you have a question?
I don't know for now. I just have to watch this video.
Okay. Jose, do you have a question?
Sir, I have one, but I don't know if it's correct.
Okay. Ask before the time goes off.
Okay.
I will drop
Like
another
my
link.
No problem. Like before you mark all this other block, like before you mark your fair value gap, like will you first mark your other block before you mark it?
Come again.
Like you first mark your other block before you now mark your fair value gap. Like my question is either is it you have to mark your other block before you now mark your fair value gap?
Yes, so that you don't get confused. You can cite them anywhere in the market. Once you are used to it, you don't even need to mark the fair value gap. Once you see it, you already